Good afternoon, everybody, and welcome to this week's weekly analysis session for the good old US of A. It's Monday, the 4th of April 2016. Let's get underway. First and foremost, our disclaimer: the content of today's presentation or any other Elite Traders Club material does not constitute a recommendation, nor does it take into account your investment objectives, financial situation, or particular needs. So, before making an investing decision based on the general advice presented in any of our presentations, please consider whether the advice is appropriate in light of your financial circumstances or seek further advice on its appropriateness. All right, disclaimer out of the way, we'll go through and have a look what's happened on the US market over the course of the weekend. The US market continues to defy gravity and keeps moving up and up and up. Even though it doesn't necessarily feel like we're in a low-risk environment, we are certainly edging ever more closer. That's not very good English, David. Ever closer to a low-risk market. We're still in moderate market risk as we speak, but certainly getting back up towards all-time highs again. So we'll go through and have a look at the index. We'll look at some specific setups. There's quite a number of new setups this particular week. There's quite a number of trail stops as well. There's one cancellation. There weren't any stop outs last week, but also some Q&A if you've got any questions as we go. As you see there, the S&P 1500 is still in moderate risk. You'll see in a moment when we have a look at the chart that it's very, very close to moving into low risk. We'll just have to wait and see what the rest of the market brings this particular week. So being in a moderate market risk, it means that we need to use our market risk multiplier of 80%. According to our trading rules, we apply that to our maximum allowable draw down, which is taken under a low market risk condition. So for most people, that's around 15%. So applying that market risk multiplier of 80% to the 15, that means that you are allowed to have 12% value at risk across your portfolio. What you will find, however, dealing with direct equities, it's very difficult to get much more than about 10 to 12% maximum value at risk, because typically you run out of money before you have that amount of exposure in the market. So an easy way to think of it is just allocating up to 80% of your capital exposed to the market. Much simpler way of thinking about it. So we'll go and have a look at the markets now. As I said, new setups. There were 10 new setups this particular week. There was one cancellation due to improper price action that started to deteriorate, and quite a number of trail stops as well. Just a reminder, if you do need any assistance, particularly the newer folks, with anything in your trading plan or scanning process, trade management, etc., don't be a stranger. Feel free to click on the little tab in the emails that we send out to you, and we'll jump on the phone and give you a hand. So let's go across the markets now and have a bit of a look at the S&P 1500. You'll see that if we just zoom in here, our little stochastic there at the moment is on 78.99. It's only got to get above 80, and then we're in low market risk condition. And you can see that this upwards trend has been really very, very strong. And again, how many times have we had the condition over the last few years where we've really fallen very, very steeply? Big sell-offs, a lot of fear in the markets, only to regain composure and move back up. And it seems to be rinse and repeat at this stage. And I think, whenever we get these bouts of extreme volatility, all the historical lessons of 2007, 2008 come flooding back, and all the perma bears out there, of which is very easy to be when you consider what's happening in the world at the moment, scream doom and gloom, only for the market to turn around and rip everybody's heads off, particularly those that are on the short side of the market. So again, we never know what's going to happen, and we just need to be patient. And that's again where the best traders out there, the people who make the money over the longer period of time, are those that just keep their trading process simple, easy to follow, and don't try and second guess the markets too much. All right, so let's go through and we'll have a look at some of the pendings for this particular week. This is the first pending from last week that was cancelled. So I just want you to draw your attention to that one. GGAL, that's not a Gogo Mobile. And you'll see here that we've now formed a lower medium-term peak. So given that we've got lower medium-term peaks, we can't be long. And no matter where this next trough forms, it hasn't formed yet, but wherever it forms, is that trough going to be at or above the second from last medium-term peak, which will be not this one, but this one. It's clearly going to be well below that. So the price action filter says goodbye to that particular stock, and we'll just wait for another setup should that occur into the future or not. All right, so let's go through and have a look at the pendings for this particular week. And the first one, CINF, and we'll just zoom out and have a look at whereabouts we are in the grand scheme of things. And certainly you can see there at all-time highs on this particular stock. Looking quite nice over the course of the last couple of months. A nice, very sharp move up, shallow retracement, nice bullish candle last week. Last trough well clear of second from last medium-term peak. So all we need to do is place our on-stop orders 0.5% above that last medium-term peak. That last medium-term peak is actually at the same level as the high on the last candle. So 0.5% above either of those, it's exactly the same figure. On stop at 66.35 and a stop loss down at 62.33. That's a fair way, obviously, below that last medium-term trough, and the reason it's down this far is because of our 2 ATRs. Remembering it must be at least 2 ATRs away from our entry. So CINF was the first one. And the next one, Domino's Pizza, a stock that has performed very well over a long period of time. Just continues to move upwards and upwards and upwards. And again, you'll see, from a longer term perspective, how well that blue line, that 63 period moving average, has enabled whoever's been in this stock, the market, respects that very nicely over the longer term. So it is certainly a very useful and a very simple indicator to follow in terms of managing a trailing stop. Or alternatively, if you're a little bit more active, we can use an ATR-based trailing stop, which we've chosen to use the 3 ATR. So this stock just formed a new higher trough, which is a positive sign. Good candle last week. Price action's ticking the box. Last trough at or above second from last medium-term peak. We just need to wait until we get past this last medium-term peak, and as a result, we put on an on-stop order 0.5% above that. The high of that candle, the high there was 136.33. 0.5% above that takes us into the trade at 137.02, and a stop loss at 125.57. That's Domino's Pizza. One with a lot. The next one, ELS, Equity Lifestyle Properties. Again, quite a lot of white candles over the last 6 months in particular. So certainly very good relative strength, and you can see that below on the histograms there. And the moving average is just staying apart, continually diverging, and really price action of late has been very, very strong. Last trough at or above second from last peak. Yes, it is. We just need to wait until we clear that last medium-term peak there. So our on-stop order on ELS comes in at $74.31. Protective stop loss coming in at $69.09. That's ELS. Next stock, what I might do is on this particular one, I might just bring up, here we go, my toolbar there, just so we can zoom in and out a little bit easier. Genpact. This is a stock that has last week's candle already moving past the last medium-term peak. We'll just go out and see where we are in the scheme of things. We're at all-time highs, and certainly price action very, very strong on this particular stock. Last trough coming in at or above second from last medium-term peak, so it's meeting our price action filter. Other than that, we're at all-time highs, good relative strength. As I said, it has broken out past the last medium-term peak. The fact that we've had that nice move up, nice shallow retracement, I'm looking for an extended move of similar sort of proportions to the upside. Should that level break over the course of the next couple of weeks, just using a measured move as a first target. On stop order here at 27.75, stop loss coming in at 25.48. That's Genpact. Next one, INGR, Ingredient Inc. So let's just zoom out and see where we are in the scheme of things. Again, all-time highs. So certainly stock must be doing something right, given what the overall market direction has done over the last 6 to 12 months in particular in the US. Again, a stock that has passed its last medium-term peak, not by a huge amount. And certainly if you're wanting to get in on this particular stock, then all we need to do is place an on-stop order 0.5% above the high of our last candle there. That last high there at $110 on the knocker, so 0.5% above that has an on-stop order at $110.55. And a stop loss at 103.66. Kim says, don't quite get how G, INGR, etc. valid entries as on-stop orders have clearly moved more than 1% above the previous peaks. Past the limit, yes, no, they have, Kim, that's certainly right. The whole aspect of price action, whether you want to get in or not, if they have passed more than 1%, well, that was our initial limit, if you like, to put a cap on it. So we're saying 0.5% and then putting a limit of 1% above that particular level. Certainly nothing the matter with getting in at all-time highs. So as far as the 1% above that, if it's moved more than 1%, I don't have a big issue with it, as long as we're not getting, when we're looking at our ATRs and where our stops are going, significant stop placement, if you like. So as an example, if we had a candle that was all the way up here rather than being at 109, but it was up at 118, a great big candle, then certainly in trying to structure the appropriate trade using your two ATRs as an example makes it very difficult to get those sorts of trades in. Next cab off the rank, INGR, MO, Monsanto. Example here, price action, really good price action. Last trough at or above, second from last medium-term peak. Last high there on that particular candle, 63.15. The high on the last candle there, 63.15. So again, similar to one of the earlier setups where both our the last peak and the high of the last candle are at the same levels. So we just need to place an on-stop order 0.5% above the breakout point, whether that's the high of the candle or whether it's the high of the medium-term peak, and that has our on-stop order coming in at 63.47, and a stop loss at 59.18. That's MO, which is Altria Group. Next cab, NDAQ. NASDAQ, so that's the NASDAQ exchange that is listed there. Again, price action, it's ticking the boxes for us. It's certainly not, the last week's candle was a lot better than the previous two, which were almost pin bars, pretty much in the opposite direction. So providing we can get a close above the high of the last medium-term peak there, then any doubters at that particular level, the market there that was on the short side are going to be up for a challenge, and that can quite often lead, once those pin bars are broken, to fairly quick movement to the upward side. So we just have to wait at this stage until price moves above that last medium-term peak, and to do that it needs to move up to $67.95 and a stop loss at least 0.5% below the last medium-term trough and at least two ATRs from that entry level. So our stop loss comes in at $62.25. That's NDAQ. A couple more to go in terms of the new setups. So this stock PNRA, let's zoom out and have a look. Again, all-time highs. And simply having a look at previous levels, you'll see that there's a fairly sort of clear supply zone, if you like, around about that $200 level there, where prices come up to before and had a few looks. It's now broken through that level. It's come back. It's retesting, which is a positive sign. Always expect a retest And last week's candle looking very promising indeed as well. Nice big white candle there, good relative strength. We've just got to wait for a break through that last medium-term peak there. So PNRA, non-stop order at 221.54, so $221.54. A stop loss coming in there at $200.43. That's PNRA. Next one, RE, Everest Real Estate. And I think this, from memory, may have been one that was in the watch list earlier. Certainly over the past few years has exhibited bouts of reasonable sort of price action along the way, but certainly not in terms of angle of ascent, not setting the world on fire. Having said that, certainly, again, around this $200 level where price has rejected, if you like, on previous occasions, is now working through any supply that's overhead, breaking to the upside, coming back, retesting, and a nice strong candle there last week as well. So, again, a little bit similar to the other ones. Whilst it has moved past that last medium-term peak, we really just want to be able to structure a trade that puts our protective stop at least below that last medium-term trough, at least 0.5%, but also taking into account our volatility, the ATR aspect of it as well. So on stop order for Everest Real Estate Group, $200.44, and a stop loss coming in at $188.01. I think that might have been the last, or do we have one more? Here we go, Texas Roadhouse. So TXRH, Texas Roadhouse. Again, similar to a number of other stocks as well that we've had a look. Again, breaking out above this sort of $40 odd dollar level to the upward side. Nice shallow retracement, nice move last week. And again, if we can get some sort of extension like we had in the lead up to the to where we just started to have that shallow retracement, if we can get that sort of move, then this certainly looks like it could hit $50 fairly quickly if the market strength continues. So just zooming out, where are we in the scheme of things? Again, we're at all-time highs. The other aspect of this that looks quite promising from a technical point of view is just moving out of this sideways configuration, if you like. So, a box type of formation where we've had our floors put in, we've had our ceiling put in, we're getting higher troughs along the way, a breakout, a retest of the underside, and again, we can structure a trade pretty clearly there. And given that we're in blue sky, certainly looks very promising given the relative strength and the history of the stock. That's it for the on-stop orders that I could find this week. Anybody else got any that they happened to find? BBKR, Brukercore. Okay, let's have a look at that one. BBKR, Actually, I'll have to get out of, because I'm in my watch list, David. I should have known that. Let's go here, BBKR. BBKR. BRKR. BRKR. KR, David. Too many fingers today. There we go. Let's have a look. All right, so let's just put on our US overlays. See what it looks like. Looks pretty good. Looks pretty good. Let's zoom out. Yep. So as far as anything overhead, which history as far as that's concerned, looks really good. I like the look of this. Put on our swing chart, exhibiting really good price action. Last trough at or above, second from last medium-term peak. We've just got to wait for a breakthrough of, what's the high there? The high there, 29.38. The high back there. Let me put on my value line, David. That's the one. 29.23, 29.38. Fantastic. Let's put it in. Just grab my calculator. Okay, so Kim's done me a favour here. He's done on stop order 29.52, which sounds about right. The high there 29.38. So let's do it. 29.38 multiplied by 1.005. There we go. 29.52, or you might want to round up 29.53. All right, so let's pop it in. 29.53. Make that a little bit thicker. That's our entry level. Protective stop. Stop loss coming in at 26.30. Well, let's go through. We've got our entry level there at 29.53. At the same time, we need to go down and check out our ATRs down the bottom there. Our two ATRs is $3.22. So I'll bring back the calculator again. Subtract $3.22. 26.30. So 26.30, where is that in relation to? That's our last trough. 26.32, it's well below that particular level. So that meets our criteria as far as being below that last medium-term trough and outside of two ATRs, 26.32. And just bold that up. Perfect. I will then go and delete my value line there, put on my annotation, on stop, 29.53, and stop loss coming in at 26.32. Perfect. So I'll just modify that, make that a little bit bigger so we can all read it. There we go. Fantastic. So I'll go and save that as an analysis. So that's just about to say, yes, I can do that for you, David. There we go. And right click, set as the default. That's in there. Now all I'm going to do is add that to my pending watch list. So I'll go down there and select USA Weekly Pendings. And okay, and it goes. Fantastic. Thanks for that, Kim. Nice looking chart. Good looking setup. I like it. Any others? If not, that's okay. There was a fair bit of work to go through the list this week. There was around about 355 hits from the scan. So it's just a matter of going through and just looking at that last bit of price action there to pick the stronger setup. So they were the setups for this particular week. I will go through just very quickly and have a look at those that triggered last week. NJR triggering in at the high there last week. So that's in the open list. NNN again triggering in as well. Would have been nice to see a little bit stronger close than that one. CHD, excuse me, nice candle to that particular entry, so that was a good start. CACI, a good candle there as well, penetrating that on stop order, so looking pretty good. Trail stops this week. AWK moving along very nicely. I'm not too sure if anyone's in AWK, but again, setting up really nicely, coming back, really bullish candle, just looking really good. Really nice movement over the last 3 or 4 months in particular. CUBE, CubeSmart, trailing at stop. Nice close to last week's close there, dragging that 3 ATR up nicely along the way. FISV, again, moving along really well, and just continues to move higher and higher, so certainly moving in the right direction. KMB, Kimberly-Clark, typically a fairly defensive sort of stock. Again, just last week's candle there, just dragging that 3 ATR line up a little bit further. McDonald's, MCD, again, nice candle last week, dragging that 3 ATR lineup fairly directly there as well. So that was a nice close to the week. MKTX. Again, here's a stock that's been in the portfolio for a little while. Getting in at around about $90 odd. It's now getting close to $130. So a nice onward movement. Certainly, you've had to be in it for about 9 months, but certainly just being patient along the way and just keeping it simple helps you to stay in those particular stocks. NVR was the next one. Just teetering up ever so slightly. Again, would have been nice to have a little bit better close on that one. PGR, Progressive Group or Corporation. Nice series of candles over the last couple of months on that one. PSA. Moving onwards and upwards. So, again, performing very strongly. Interesting, at the moment in the US watch list, there's around about 35 open trades. And so pretty much half of them over the course of the last week have had their stops trailed. So that's, again, it's a positive sign. It's another vote of confidence, if you like, for relative strength as well. So Kay says, I could not access the recording on Friday. The link did not work. Okay. Well, I'll have to go and have a bit of a look at that. What I will do in a moment, Kay, is I'll go through and I'll have a look at the pendings in the ASX watch list, just to see if there were any of those any new setups from last week. From memory, I don't think there were. I think there was one stock that actually triggered last week, which was ALU, but I'll finish the US first. So we're on PSA, TSN, Tyson Foods. Again, look at the white candles. I mean, there's just so many of them. Just really good relative strength. Continues to move very, very nicely. TWC, this one's laboured a bit. Only just recently starting to move up. So there, death by 1,000 trades. Look at that. That's just a lot of sideways movement, and that would have frustrated the hell out of you. And if you had jumped out of that one earlier, I wouldn't have blamed you. Having gone sideways for such a long period of time. TWC, WDFC. And this has been in the portfolio for a considerable amount of time as well. So around about a $6 risk on this trade initially. The entry way back, pretty much, well, what's that, about 15 months ago, 16 months ago. So it's gone from $80, it's now up at $110, so it's put on about $30 odd with around about a $6 risk. So again, that's a nice return there, both as a percentage return and as a R multiple as well. WDFC, it must have been spraying some of itself onto its tracks in the markets. It's obviously moved along very fluidly over recent times. WTR, Aqua America, only just last week dragging its trailing 3 ATR up a little bit higher. SYY, Cisco Corp, again moving upwards. Nice candle last week, dragging its 3 ATR upwards as well. A couple more to go. SCG, nice couple of nice candles recently, dragging that green 3 ATR line back up above the initial 2 ATR based protective stop. CONE, Cyrus 1, a couple of really nice candles there, and I'll just pop that on there. Sometimes that volatility stop that we put on there, it skews up the chart a little bit, and I've got it set on to look back pretty much 200 periods, so sometimes just having to bring that back a little bit for it to show up and not destroy our scale on the right hand side. And you can see there just that little green line just surpassing our initial 2 ATR based stop as well. And the last one, CORE, Coresight Realty, again just moving onwards and upwards. So they were the trailed stops there. What I will do is I'll go through and just bring up the ASX portfolio there, Kay, and we'll have a look at that. ASX weekly pendings. So we've got JBH in there still from the previous week. So that one's set up there is still valid. That one there, ABC, hasn't quite yet made $5.18. If I bring that up there, you'll see the high there, 5.17. So that one is still pending. Price action is still fine. ALU triggered last week. The last candle there, just getting up to 5.96. So that's now triggered and is in the open watch list. ARF, again, price action is still fine. We're just waiting for that to trigger. EDE, Eden Energy, so another example of one of those stocks there that has certainly passed its last medium-term peak, looking very strong there. I'm not too sure why this didn't come up on my scans the previous week. I might just check the low of that one there. Let me just... the low there was 8.5 cents. On that one there, the low there, 8.5. So we actually had that second from last candle is basically an outside candle. So we didn't have a short-term uptrend confirmed. It was only confirmed with the big candle there last week. That was pretty much it as far as the pendings from last week. Just the one stock there, ALU, Altium, was one that triggered and is now in the watch list. All right, that's about it in terms of the US markets. Any questions, observations, recollections? It's interesting, isn't it, how the US market was looking very dire for a while. The Australian market certainly just can't seem to get, its mojo together at this particular point in time. There was a macro session on Friday, Kim, so that should be available. It may not have been posted in the right section, so I will go through and have a look at that and make sure that it is posted in the right area. I was out of the office on Friday, so I had to do the analysis on Friday evening. So I'll go through and I'll check all of that for you and make sure it's all in the right areas where it should be. Right, folks, if there's nothing else, we'll catch up with you a little bit later on in the week. Bye for now.